The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Excuse us
Hello,
for starting
everybody.
late. There's a miscommunication about the time. I apologize, Jeff. Go ahead and anyway, sorry for the miscommunication and stick around.
Yeah,
Go
we're
ahead,
almost
Jeff.
starting half an hour late.
I'll get out of your way.
Yeah, people are emailing. Where is it? Sorry for the delay. I said that one time, as soon as I get good at converting times into Eastern and New York and Texas, and once that happens, I'll be ready for retirement. So apologies on the mix-up on time. Internally, we thought we were going to start in about a half an hour, so we're a little bit just kind of rushing to kind of get things going. So with that being said, you should be able to hear me. You should be able to see me. And I'm sorry for the late start. If you have any questions, and thank you for coming too. And if you're watching the recording in the future, Greg, your camera's still on, just so you know. If you're watching us in the future, there was no problem at all with this recording. I'm just kidding.
So
All right.
people should know there's a few things going on. One, they completely changed the interface on us again, and for that reason, Jeff, I don't know how to make myself unviewable. Can you
On
get
the
me out?
bottom where there's the mute button is the camera button. If you just hover over that, it'll
Ah,
say
look at you
camera.
telling me how to do stuff. Okay, bye.
Bye. Okay, very cool. All right, let's go ahead and get started, guys. I'm sorry again. I'm actually over there just working on slides, feeling kind of like, okay, well, this is going to start on time. I kind of want to go through things. It's not a class I do often and just trying to get prepared. So, welcome to the class. I hope you're doing well. I've talked a little bit about gaps in the traders forum before. This is the first time I kind of tried to present it in kind of a cohesive way. So, um, I hope it's enjoyable for you. I hope you learn something. And if you have questions as we go, make sure to ask them, and I will do my best to answer them. All right. Also, if you're watching this on YouTube, like and subscribe. It helps a great deal. All that kind of good stuff. Okay. Let's go ahead and start with the legal disclaimer. You should be able to see my screen, and you should be able to see me as well. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell securities, but rather guidelines to interpret and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock, the Traders Forum LLC, and their employees disclaim all liability for any investment decisions by investors based on the use of the software, trading strategies, or any information provided in connection with the companies. MetaStock Traders Forum and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as an investment advice or the solicitation to buy a security. So if I understand the new interface, which I think I do, I need to go into questions mode over here. So give me just a second. I want to make sure I can see your questions. I do see that there is one, and it says Charles asked me to speak louder. So Greg, let me know if there's an audio issue. I'll try to pronounce a little bit louder. And thanks for being here, Charles. Sorry for the
Right
late.
now the audio sounds fine to me, but you could speak a little louder. That'd be okay.
Okay, sounds good. I can do that. All right. Before we get started, I want to say thank you to Steve Bigelow. A lot of the knowledge and a lot of the stuff that I'm going to talk about in the webinar here was put together by the late Steve Bigelow. Steve was a friend of mine, a great partner of MetaStock, and a mentor. A lot of the ideas taken out of this presentation, and in fact, I'd say the lion's share of them were inspired by a course that he does called the GAPS course. Okay, this course is going to be available in the near future at a website that we're working on called the Traders Forum, and you can find it at www.thetradersforum.com. It's not available just yet. We're going to start working on that, but it's still, the website is ready. There's a ton of stuff we want to do to it, and I'd recommend you come join it because we have a lot of really cool people up there, some lessons. We do weekly events. We just had Jake Bernstein on earlier today, and he had a really interesting story about how he got started in trading, kind of some of the advice he has. Thetradersforum.com. We'd love to see you there. So, with all that being said, okay, I just wanted I thought I had one slide in a little bit of a different order. Uh, for a gap, it's quite simple. If you want to find a gap, basically what you're looking at is an opening higher than the high of the previous bar. So as long as you have an open above the high of the previous bar, that's going to be a gap. Okay. They're very, very common. They happen quite often in charts, and they can kind of mean different things in different scenarios. And there's one of the things that I kind of realized as I kind of started to learn about gaps is there's a lot of nuance to it. So I'm going to kind of try and break down what I learned as I was kind of educating myself about gaps to kind of give you some ideas or some things to think about. Wow, you're looking at gaps. And one of the other things that I like, and I'm going to show you this, is actually I like the poll that you just put up, Greg, because it fits really well with what I'm about to talk about. But one of the things that I've I forgot what I was saying. One of the things that I've noted. Okay, let me just go on. I lost that thought. It's not coming back. A lot of people are kind of a little skeptical. Oh, the reason I put the gaps course together, the reason I started learning about gaps is we actually have a new gap finder in MetaStock. I'm going to show you how to run it. I'm going to show you how to screen for gaps. I'm going to show you how to make a small modification to have it show stochastics in there. So all of that kind of stuff I'm going to kind of roll into today. So one of the things that I've always been a little bit hesitant about with gaps is kind of understanding what would happen after. And Steve actually talks a little bit about this. He says a lot of times if you have a nice big gap on a chart, you're like, well, is it going to continue to go up? Is it a continuation gap? Is it an exhaustion gap? What are you going to do with it? And so for me, when I looked at gaps and something gaps pretty heavily, in general, my idea was to kind of, okay, well, let's see what happens later. Like, let's see what happens in the following couple of bars. What's going to kind of break down in terms of the bars? How is the price pattern going to form after that? And it turns out that that kind of instinct is actually kind of correct. One of the things you want to look for is what are people going to do after the gap? But in the class, he talks gaps are your friend. Investors buy exuberantly at the top and they sell exuberantly at the bottom. And the reason there are a lot of exhaustion gaps are that's that last exuberant kind of push, and then it kind of fizzles away, and that's called an exhaustion gap. So let's talk a little bit about the types of gaps that you can see in the market and kind of some of the rules of thumbs, a couple of different ways on how you can identify whether it's an exhaustion gap or continuation gap and kind of usually what they mean. So this was taken from Investopedia.com to cite my work, but in terms of the gaps that are available, you've got common gaps, and they happen everywhere. You've got breakaway gaps that occur near the end of a price pattern and usually signal a new trend. You've got an exhaustion gap and a continuation gap. So those are kind of the four characteristics of gaps. Let's kind of go ahead and kind of talk a little bit about maybe how to identify whether it's a continuation or an exhaustion gap. And a couple of the methods that people use for that is volume confirmation. So in the gap scanner that I'm going to show you in a little bit, it actually has a volume confirmation. And what it looks for, and Kelly designed this, is it'll look for if volume is above its 25-day moving average. So you can use that as kind of a confirmation. You can also use stochastics. You can look for stochastics to be in an overbought or an oversold area as a clue. And the other thing that's important is how does the price behave after the gap? So if you have a big, huge gap, the next candle is usually pretty telling us whether or not it's going to be a continuation or an exhaustion gap. Whether your gap is happening in an overbought, oversold zone, that's also going to give you a really good indication of whether or not it's an exhaustion or a continuation gap, and particularly where the stochastics are headed. So let's go ahead and kind of dive into a little bit right here. This is a gap that I kind of pulled back here when we were kind of working on kind of the gap course, or the gap webinar, I guess is more what we're going to call it. But here's a gap that I found using the gap scanner for MDB. And what I just want to kind of point out with this one is we had a gap and it immediately kind of sold back, went down to kind of the support level of 50 SMA. Okay. If we kind of look at the volume on that, if we look at where the volume was, the day before the gap is right here. There's a lot of volume here. We have that big gap up and there's no volume relative to the bar before. And so at that point, that might have been an initial clue that there was an exhaustion gap. Of course, then we had a little bit of an indecisive or a doji. Actually, one of the things that we're going to talk about in a minute is how when you have a gap into a doji, it usually is a sign of a reversal. So let's go ahead and kind of just talk a little bit more about that, though. I'm going to kind of talk more about some core concepts about gaps. What I would encourage you to do is actually, if you kind of like some of these, kind of play with them on the charts. You should take nothing that I say as fact. You should always kind of play with it and see what you like. So gaps at the top, if you have gaps at the top, these are generally going to be a good indication of a possible upcoming reversal. It's a sign that things have gotten exuberant. The thing that I like about Steve is he really defines it in the course that he talks about. A gap up at the top, some indications that you might be gapping up at the top is you'd be looking for a sell signal after that gap. You'd be looking for whether the trend continues, and you'd be looking at where stochastics are. So the gap at the top is defined as a gap up in an uptrend with stochastics that are in the overbought condition. Okay, if that happens, what we want to do is we want to look for a signal to sell, and a good indication of what's going to happen is what happens on the bar after that gap. Okay, so I've got an example here of Regency. You've got a gap, a small gap, not a huge gap. Your stochastics are in the overbought, and exactly what happens is you get a bit of a pullback. So, and obviously, if we're looking at this one, you've got a gap into kind of a doji type of a bar, an indecisive bar, and then you get a sell down in. You start to get these bullish candles where they're closing lower than they're opening. It's an indication that the price pattern is going to reverse for a time. In terms of gaps up at the top, these are actually lessons that Steve taught in his class. But it says when you see a gap at the top, if you're in a long position, you should be looking to exit that position. He suggests a couple of exit positions. So for example, if we're in a position, we have a gap up, we could look to place a stop under the low of the current day. We could look at the previous day's close, or we could look at the previous day's midpoint. So just to kind of illustrate what that means, if I'm in a trade for Regency, we have a gap up with our stochastics in the oversold. I have a gap up in an uptrend. I could look to put a stop right down below this low period here. I could look at the high point of the previous bar, which would be right here, or the midpoint of the previous bar. But one of the things that he talks about is when you have a gap in an uptrend, it's most likely with stochastics in the overbought, it's very, very likely that it's going to be, the odds are more likely that it's going to come down and go up. So that's a good time to kind of put in your stop. So here I'm going to answer the question, Greg, so I can see any questions that come in. Let's see. All right, let me go ahead and do that. I'm very good at answering the questions when I can see it. So, and if you do have questions, let me know. Okay, let's kind of move on. I talked about this already with that example. A gap into a doji is a good sign that the stock is a predominant sell signal. It represents indecision after exuberance. So let's, on that same MDB chart, here you had the gap, it gapped into a doji, and immediately what we had is we didn't have any enthusiasm left in the chart. There you go. The candle after a gap will give you an indication of whether the trend will continue or if it's going to end. So that's what we're going to talk about with gaps up at the top. That's a gap up at the top. Okay. If you have a gap down at the top, if you're up at the top of a price pattern and you get a gap down, that's completely a little bit of a different story. And the way that that's defined by Steve is a gap down at the top is defined as a gap down during an uptrend with the stochastics in an overbought condition. Okay, this is an indication that sellers are trying to get out of positions. Okay, right here is an example of, and it's usually an exhaustion. Well, actually, this is not a great. So here we've got a gap down on Intel, and it's an initial sign that the pattern is coming down. So now I think that was kind of out of order. Hold on. Okay, yeah. This is actually, in my opinion, this would be a gap down at the bottom. Your stochastics are in an oversold area. That's usually a sign of exhaustion. So My mistake. I need to actually kind of reorder that side a little bit. If you have a gap up at the bottom, and actually, okay, all right. I'm just gonna kind of move on. If you have a gap down at the bottom, it's usually the sign of an exhaustion gap. Okay. If you have a gap up at the bottom, this can be a sign of new investor sentiment in the market. So if we look right here, we've got a chart of Verizon. Right here, you've kind of come down into a downtrend, have a nice little gap down. Stochastic's not quite in the oversold territory, but pretty close. They start to gap up, and what you get is kind of a reversal of trend. Or this gap is an early sign that this pattern is going to kind of go on. Okay, here we've got Carnival Corporation. You have a little bit of a gap up, and then a move kind of into an upper movement. So right here in AT&T, you've got a gap up with stochastics at a low, and then what you have is a bit of a change of trend. So usually when you have a gap up at the bottom of price point, it signifies a potential reversal of trend. The way that you can confirm that is the way that the price behaves after that gap. So gap up at the bottom, you can use candlesticks after that gap up to help you confirm the price activity. Here's another one. It's actually one of Steve's favorite patterns. You have a doji, which is an indecisive trading day. Actually, in this case, you have a series of dojis followed by a gap up. That's actually what Steve would call a doji best friend. It's happening with your stochastics in the overbought. What that signifies is the end of a potential downtrend. And in this case of Kroger, it is a change of a trend. So there's a couple of other things that he kind of talks about. Here we had a couple of gaps in a row. He usually says after 3 gaps, I think that's my next slide, the 3 gap rule. Anytime you see 3 gaps, you want to start taking profits because the instrument has almost likely moved to an overbought position. So right here, when you see gap, gap into a gap into a gap, it's generally kind of meaning that the stock by then is going to be in an overbought position, which you can see in terms of the stochastics here. So a gap down at the bottom, this is defined as a gap down in a downward, preferably with the stochastics in the oversold condition. After this happens, you're going to be looking for a candlestick buy condition. A good indication, again, is what happens after that gap. A gap down at the bottom is usually a blow off or an exhaustion gap. You can look for that as a confirmation that there is a reversal using candlestick buy signals. Now that's where I think I meant to put that in L1. But here you can see with Aflac, huge gap down. Stochastics get into the oversold condition. A little bit of indecision around the 200, but definitely an exhaustion gap right here. All right, here you have a little bit of a gap down, and with the stochastics in the oversold, a blow off, an exuberant selling off at the bottom. And what happens immediately after that gap on? It sells up all day, gas back up, it starts to move forward. So gap down at the bottom, Steve had a very simple rule. When you have a gap down that happens at the bottom of a trend, start looking for a buy signal. At that point, you've had an exhaustion gap. There's very likely a trend change coming, and you'll just be looking for a reason or an excuse to buy. Okay, so that's what I wanted to kind of talk a little bit. Paul Behrman says he's starting at the beginning. I think he means he's just backed up the video to the start of the beginning. So there you go. All right, I don't see any questions, but I kind of want to talk a little bit about how you can use gaps. Hopefully that gives you some ideas. I would recommend going through the gap course that was put together by Steve. It's very, very good. But I kind of wanted to just kind of give you some kind of ideas in terms of how to use gaps. And now I kind of want to go into MetaStock 19 and kind of show you how to use the gap scanner, make some adjustments for it, and find gaps in the market. So we're kind of going to change gears just a little bit. MetaStock 19 included a whole bunch of new things like new theme support, new and improved charting workflows, new improved layout workflows. The container's modern, it looks nice. It's a really, really solid upgrade. But in addition to that, there's actually the ability for you to actually scan for and find gaps. So what I'm going to do is I'm going to kind of go back into MetaStock, and I'm going to just kind of show you a few things in terms of identifying gaps and how to use the gap scanner and how to actually include stochastics in the gap scanner so that when you're running the gap scanner, you can know if a security is in the overbought or in the oversold condition. So let's go ahead and do that. What I'm going to do here is I'm going to come in here and I will just find the gap scanner, which is, it starts with gap, which I think it starts, yeah, gap identifier. And this is by default the one that you're going to get. Okay. Now what I'm going to do is I've actually added an extra column to this, just because when I run a scan for gaps, I want to know if it's in an overbought area or an oversold area. That allows me to more easily find out, based on the requirements that Steve gives, is it a gap in an uptrend, or a gap down in an uptrend, or a gap up at the bottom, or a gap down at the bottom. That way I can understand whether or not it's an exhaustion gap or a reversal gap. So let me go ahead and show you how to do this. It's actually pretty simple to do. What I'm going to do is I'm going to come in here. I'm going to grab the code that I used for this, which is just this. I'm going to put this right now in the chat box. If you're using MetaStock, you can do this at the same time if you want. But this is the code that we're going to kind of put in here. Okay, it's just Stoke 12.2. Okay, but I want to show you kind of what I did to exactly make this, and that way you can have this additional field. I don't want to make you too confused too fast. Let me go ahead and delete this exploration here. And I'm going to go ahead and delete the exploration because I'm going to actually show you how to kind of recreate. So I'm going to do here is I'm going to go ahead and just so that I can kind of leave the one in here the way that it came from the factory. Just come in here. I'm going to go ahead and make a copy of it. So I go ahead and hit copy. It's going to actually it's going to make a complete copy of this actual scan. And what I'm going to do is, instead of calling it copy, I'll call it with stochastics. And what I'm going to do is, with that little simple piece of code, I'm also going to like the video real quick. With that little piece of code, I'm going to come in here, and where it says column G, I'm going to click over there. I don't need to make any other changes to this. I'm just going to kind of put that code right here. Then I'm going to click on the G. I'm going to label it stochastics. Okay. I'll just name it, well, Stoke for short, because it doesn't quite fit stochastics. Okay. That's all I have to do. I'm going to go ahead and click on OK. And now I'm going to go out and I'm going to look for any stock. So because I've added that little simple piece of code, I'll be able to see if it's confirmed with volume and also if it's overbought or oversold. So I'll show you what I mean with that in just a second. I'm going to go ahead and run the exploration. I haven't run this yet. I was going to come in here and run it in advance, but we had a little bit of a fast start. So let me go in here, and I'll do is we'll do a little bit of a list. And I'll just show you how to kind of run through the exploration and kind of read through the results. So I've got the Dow Industrials, the NASDAQ 100, and the S&P 500. Okay, I'm going to go ahead and start the scan. We're just going to run just this scan. We're going to run it on today. So the market's closed. It's been closed for a little bit. If you do run this during the day, I'll go ahead and start the scan. If you do run this during the day, one of the columns looks at the volume. And so if you're in the middle of the day, you might not get a lot of positives unless you're running it at the end of the day or towards the end of the market, just because it's looking at the moving average, the volume, and comparing it to a 25-period moving average of the volume. Hey, Vincenzo, it's good to see you. Thanks for coming. All right, we'll go ahead and let this run. I'll show you how to read it. Okay, and it's done. So out of about the 505 stocks that we had, only about 14 today had the gap up in the morning. Again, all we're looking for is any space between the high and the open. It could be a big gap, it could be a small gap. As long as it fits that definition, it'll show up on this report. And out of all we ran the S&P, we ran about 500. We had 505 rejects. We had 14 results. So it isn't something that was very common today. Sometimes you'll have a lot of them. Sometimes you'll have a little. Right here, I've just got a list of the instruments that are showing up. Right here, I can see if it's a gap up. If it's a gap up, it's going to have a 1. So AstraZeneca had a gap up. PDD had a gap up. Williams had a gap up. And the rest of these are gap downs. Okay. Right here, we talked a little bit about volume confirmation. Then the way that kind of Kelly defined volume confirmation is he looked at a 25-period moving average of the volume and compared it. If it was higher than the 25-day average, he called it volume confirmed. If it wasn't, it wouldn't be volume confirmed. So if I wanted to look for the buy signals that are just volume confirmed, I'm going to sort by this column. We'd be down to PDD Holdings and Williams Comps. Okay. Now, if I wanted to understand if these were overbought or oversold, so these are both gaps up because they're gaps up with volume. If I wanted to understand where the stochastics are, the stochastic readings that I have for PDD is 97 out of 100. So it's almost all the way up as far as it can go on the scale. And for WMB, it's 97 as well. So I'd say with these two gap ups, you're very, very overbought. I was checking in my brain to see if I used the right terminology. And so I would say that kind of very likely these are probably going to be exhaustion gaps. Let's take a look at the charts though. And again, what we want to do is we want to see what happens after the gap to make sure. Let's go ahead and open up the chart though, on these two. Okay, we'll go ahead and let those open. We'll open up, where's my MetaStock? There it is. Okay, so here, oh wow, so if we're kind of looking in, there's actually some gaps on here we could actually talk about too as well. So I'm going to do that. But if we're kind of looking at this gap up, we gapped up into a doji that follows one of the rules. It's almost likely a very decisive day, gap into a very indecisive day, almost surely a sign of exhaustion. It will confirm in the next couple of days. Okay. We've also had quite a few gaps in a row. If we count here, 1, 2, 3, this would be the fourth gap in a row. We're getting into an overbought territory. So that doesn't necessarily mean that this stock is going to reverse. But the way Steve kind of puts it in the class that he does, it's more likely that it's going to reverse than continue to go higher. And there's a lot of things that kind of tell us a story like that. The opening of the next bar, if this gap's down, if it opens and you have a bearish engulfing or another type of a candlestick signal, it's probably going to at least settle for a while. Okay, let's take a look at this gap here. Here you had a very significant gap down. Okay, stochastics are not in an overbought. Continues to go down for a couple of days. You have this indecisive bar, and then it bottoms out. Okay, right here, what you've got is kind of what you could call this is almost an island gap. Okay, after this indecisive day, you have a bit of a doji best friend, not a very big one, just a gap. Okay, but here you've got a gap that is definitely your gap up at the bottom. Okay, and signals that the stock might have a reversal in trend, might being the important trade there. Let's take a look at the other one, which would be WMB Holdings. All right, so right here, what we've got, okay, your stochastics are in the overbought. Okay, you had a bit of a gap up, but we gapped up and we closed high, so we don't have the doji rule. We are setting a new all-time high. What we would be looking for in this particular scenario is how does the next bar open? Do we have a candlestick buy or a sell signal? Is this going to be an exhaustion gap? I'd say it's more likely than not, just based on the stochastics. But we'll wait for the kind of the rules to come in here. At most, we might see a settling in and then a continuation of the run up. Oh, there you go. Hopefully that's a little bit helpful for you. Let me kind of go back in here. Yeah. Okay.
Hey, Jeff. I'm sorry if I startled you. You do have a question.
I just normally jump like that.
You do have a question. You do have a question by Juan Cortez. I'm not sure if you answered it.
Okay. Yeah. I did not see the question.
And I only popped in because, again, folks, sorry, we're working with a different interface, and I just want to make sure Jeff sees.
Yeah, I see the question. It seems to be out of order too. Like it's ordered differently because with GoToWebinar, I'm used to them coming in the wrong way. So one, with the stochastics, actually, you ask a really good question. If the stock is very volatile, should the stochastic parameter change? And actually, the answer for the stochastics is 12.3, 12.2 is what Steve kind of used as a default. He actually had different parameters for stochastics based on whether or not you wanted to trade it long term, short term, or medium term. And if you give it, I could probably find the answer to that question. I think I have it written down. I don't have it memorized, but let me look here real quick because I do think it's part of the larger kind of notes that I took. Let me just reference my notes real quick. Okay. I found the right presentation. Hold on just a second. All right, here, yeah. Here we go. Okay, all right. Here's the actual answer that he gave. So Steve used 1233, but said you can use whatever stochastics you like. So if you wanted to, I wouldn't give you any advice on what stochastics you should use, but you could play with it on more volatile stocks to kind of see how it looked, right? If you're longer term, maybe you could use 1455. That was a suggestion that he gave. For day traders, maybe 522. So those are kind of the rules that he outlined in the GAPS course that he put together. Readings below 20, of course, with stochastics, I actually should have left this slide in, indicate the stock is oversold, and if it's above 80, um, uh, it indicates that it's overbought. The other thing that he talked about when looking at gaps and kind of trying to identify what they were doing, it's not only where stochastics were, but the direction that they were headed. So for example, let's look at, well, let's see if this is a good example. Right here we have a gap up. The stochastics are just getting overbought and they're still pointed up. So that's kind of why I'm a little bit iffy. I want to kind of see how this opens. Because if it opens positive and trades positive, it's probably a continuation gap, even though we have a gap up at the top. So one of the things that I found was that when I was going through Steve's courses was there's a lot of nuance. What you want to do is kind of keep in mind what your stochastic rules are, whether it's volume confirmed, all that kind of stuff. But you really want to pay attention to kind of what the price activity is afterwards, because it'll be very, very clue. If you were in a long position here, it would be advisable, based on kind of the rules that Steve lays out, to put in a stop. I'm not in a long position on this one, but if you were, for example, you could evaluate putting a stop right here, a stop right here, or a stop at the midpoint. And any of those would be advisable, because once you have a gap up at the top, if it comes back through the low of this day, it's almost certain that the buyers are no longer in control and the bull bears are coming in. So hopefully that's helpful. Hopefully that answered your question. There you go. Let me kind of go back in here. Greg, any more questions? No. Oh, how do I stay so hands-on?
Nothing that I see right now. Thank you for asking.
Cool. This is one of the reasons I kind of got a little bit learning about gaps a little bit is because somebody asked me in the forum to kind of cover gaps. I'm like, okay, well, I don't know too much about them, but like there's some resources. And so I did a little bit of searching. But it does tell nicely into 19. 19 is such a huge upgrade to MetaStock. That's why I put in these 19 slides here. We didn't even talk about any of this other stuff. There is, I do love the new look and feel. I love the chart-based interface for 19, all that kind of stuff. If you haven't upgraded to 19, I'd recommend it. And there's many ways to get in touch with us. They're all right here. On this side, you can call us at 800-882-3040. You can get in touch with us at metastock.com/saleschat. You can sign up for you can't do an upgrade here, but you can get an extended trial where you buy a month of MetaStock and get 3 months. You can do that at metastock.com/3for1. I hope it was helpful. You're welcome. All right. Very cool. With that, I don't even know what time we started. Anyway, I hope that was helpful. Hope it gave you some ideas on how to look at gaps going forward. Greg, your video just went on and you're in the dark.
Oh, I don't know why that is. I'm not in the dark, I can assure you. So many exciting things happening today on our presentation. I'm sorry, it sounds like you're wrapping up. You started to answer your question at about 20 after. Okay. So we've been going for about 40 minutes.
Okay. Well, I ran out of things I wanted to talk about. So,
okay.
In any case, I would encourage you, if you're interested in signing up for the if you haven't gotten 19, get it. If you want to do an extended trial of MetaStock, go to metastock.com/3for1. And I'd also recommend that you go to the forum and join us. www.thetradersforum.com. Thank you, everybody, for coming. Appreciate it. And I'll see you again soon. Oh, there's a little timer at the top. All right, very cool.
So long.